Assessing effective management and control for determining corporate tax residency. In the UAE corporate tax framework, the determination of a juridical person's residency for tax purposes goes beyond merely identifying the place of incorporation. Solely relying on the incorporation location may not accurately reflect the economic reality of where the business is actively managed and controlled. Therefore, the corporate tax law also considers whether a juridical person, even if incorporated or formally recognized in a foreign jurisdiction, is effectively managed and controlled within the UAE. This approach aligns with international tax principles such as central management and control and the place of effective management standards, widely used to capture the genuine location of an entity's strategic decision-making. Key concept: effective management and control. The concept of effective management and control centers on identifying where key management and commercial decisions for a business are substantively made, rather than simply where the business was legally established. This concept ensures that entities are subject to tax in the jurisdiction where their core operational and strategic decisions are executed, thereby reflecting the economic substance of their activities. Criteria for determining effective management and control. To establish whether a juridical person is effectively managed and controlled within the UAE, an assessment is made based on the specific facts and circumstances related to the entity's operations and governance. Critical factors include: 1. Location of key management decisions. The primary focus is on where the most significant management and commercial decisions that drive the juridical person's business are made in substance. This typically involves determining where highest-level strategic decisions essential for the management of the entity are taken, the location where decisions with substantial economic and functional importance are formulated. In many cases, this will correspond to the place where the company's board of directors, or equivalent governing body for other types of entities, convenes to make these decisions. Such meetings often set the strategic direction, financial policies, and operational priorities of the company, thus serving as a clear indicator of the place of effective management. 2. Role of delegated authorities. In situations where decision-making powers are delegated by the board of directors to another person or body, the location where this delegated authority operates may also be relevant. If a management team or executive body exercises delegated decision-making power outside board meetings, their operating location could influence the assessment of effective management. 3. Location of key decision-makers. While not determinative on its own, the physical location of key executives or controlling shareholders may be taken into account if they are actively involved in making management or strategic decisions. However, the mere residence of board members or senior executives within the UAE is not, by itself, enough to establish effective management and control in the UAE. 4. Unified place of effective management. Importantly, there can be only one place of effective management and control at any given time for each juridical person. This principle underscores the need to establish a single, primary location where the majority of high-level decisions are made. Therefore, the existence of multiple locations where different decisions are made does not change the fact that a single, central location must be identified as the primary seat of management and control. Practical implications. For a foreign incorporated juridical person to be considered a resident person for corporate tax purposes in the UAE, it is not required that all or even a majority of the board members or equivalent governing bodies reside within the UAE. Instead, the emphasis is on where these members meet to make substantive decisions that impact the entity's business direction.